Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Record stumble on the Lal Street. The Nifty scales 19,000. The Sensex crosses 64,000. Banks and mid-caps join the rally. Adani promoter entities raised nearly $1 billion after selling shares in Adani Enterprises and Adani Green. Sources say GQG partners, IHC among others, bought the shares through block deals. Market regulator SEBI holds a crucial board meeting. Stricter disclosure norms, foreign portfolio investors and total expense ratio regulations for mutual fund houses on the agenda. RBI's financial stability report shows stressed assets in the banking system dropped below 4% as of March this year. Expect asset quality to improve below 3.6% by next year in the baseline scenario. Air India and Vistara merger flies into the competition regulator's crosshairs. CCI issues a notice to Air India, asks why the proposed merger should not be investigated as it could adversely impact competition. The Union Cabinet hikes the minimum support price for sugarcane by 5%, also extends the fertiliser subsidy scheme and commits 3.7 lakh crore rupees till FY25. The Enforcement Directorate arrests Supertech Group Chairman R.K. Arora in a money laundering case, produces him in the Patiala High Court. He was summoned by the ED 3 days ago and was being questioned. The government notifies draft rules for its proposed green credit scheme, invites comments within 60 days. As per the draft, individual urban local bodies, among other entities, can earn green credit for undertaking environment-friendly activities. Each credit earned will be traded on a market platform. The monsoon rains hit most parts of India. Parts of Mumbai, Kolkata and Bengaluru waterlogged after incessant rainfall over the last 3 days. The Met Department predicts heavy rains in the coming days, issues a yellow alert for Mumbai till Thursday. Prime Minister Modi's pitch for a uniform civil code triggers a political discourse. The Congress says the Prime Minister is distracting people from issues of poverty, price rise, unemployment. The DMK says that the UCC should be applied to Hindus first. The TMC calls it a threat to national unity. The Muslim Personal Law Board decides to submit its recommendations to the Law Commission. Bajaj Auto and Triumph launched two 400cc motorcycles, the first products under their partnership in India. Sources say the new motorcycles are likely to be priced under 3 lakh rupees.
There it is, fresh all-time highs on the Nifty. We're holding above those levels, and as we hit that mark, some bit of an algo trade would have played out.
Now, once again, we're back to levels of 18,920.
Okay, there we go. 19,000 is on the board. It is on the screen. And this is the first time the index has scaled this milestone. It was 18,887. We crossed that in the morning itself.
Well, that is the story. It was a record-breaking day on the Lal Street today. The Sensex gained nearly 500 points, crossed 64,000 in intraday trade. The Nifty touched 19,000 for the first time ever, but ended the day just shy of that level. Mid-caps and banks were not far behind in what was a broad-based rally today. All sectoral indices closing in the green. Prashant is standing by with the key factors driving the markets to record highs. What a strong day, Prashant, for our markets. New records.
A mere 4% rally this year, but a new all-time high for the Nifty. More than 20 days after the Nifty Bank climbed to a new high, the Nifty has done the same. The previous high, remember, was 18,887.6 made on the 1st of December 22. It's been taken out today. So I thought it makes sense to take a quick look at fundamentals which are underpinning this optimism in markets. I count 5. First is growth, and this is because we starting top-down. Growth prospects generally are looking much better for the country. In the fourth quarter, Jan to March 23, India's GDP saw a re-acceleration of sorts, reaching a year-on-year growth rate of 6.1% compared to 4.5% in the previous quarter. As a result, economists have generally upgraded their forecasts for the full year FY24 growth. We've seen a rapid pace of disinflation, right, which has raised hopes of lower interest rates at some point late this year or early next year. And this is the data, right? 3 months flat, India's CPI has fallen from a level of 6.4% to 4.25% in May. Even core inflation is finally showing signs of softening. Good news for consumers and businesses. Now let's come to earnings, right? Corporate earnings. Analyst consensus expectations for MSCI India is to post a very healthy earnings growth of near 18% this year. Now this will have to be watched. Growth did pick up in the fourth quarter as compared to the third quarter of last year, but it's still not quite there. Let's focus on some structural drivers as well. First is the government's focus on infrastructure spending. with multiplier effects for the rest of the economy. Second is the mood around manufacturing businesses in India, which of course is reflected very well in stock markets. And third, India's workforce is seen as a demographic dividend. India is expected to add 100 million people to its working age labor force. Between 2020 and 30, China is expected to lose 25 million in the same period. India's macros on the external side have also improved in recent months. India's current account has improved massively from a 9-year high deficit in third quarter of calendar 22. Strong FI inflows have helped the balance of payments, and RBI's forex reserves are once again approaching that $600 billion mark. Those are the fundamental drivers, right? But let's also keep an eye on some developing risks. And I count 3 here. First is global growth. One of the biggest risks to the stock market is expected contraction and deterioration in global growth, especially in US and Europe. If the global economy slows down, it could hurt India's exports, especially IT services, which is a large chunk in as far as weight in markets go. Valuations, right? They've always been a premium to other markets, but now India trades at 20.5 times forward PE, about 17% higher than its 15-year average. Relative to other emerging markets, India's valuation premium is now 70%. Historically, this has run at about 50%. Monsoons have been delayed this year, although things are picking up and is expected to pick up for the rest of the monsoon season. But mind you, a lackluster overall monsoon season could impact agricultural growth and lead to lower rural incomes. So those are the 3 risks as well. Now, to sum up, while you enjoy the rally, watching your portfolio values swell, keep an eye on what you pay for stocks. Don't overpay and don't buy into shady stocks. Bull markets often lead investors to do both, which then comes back to hurt portfolios in a future downturn. Back to you.
And that is good advice there, Prashant. Many thanks for joining us. And Samir Arora, Helios Capital says the Nifty hitting 19,000 is worth celebrating, but one cannot take the eye off the ball. Arora added that Nifty is not at an all-time high in dollar terms. Mark Matthews, meanwhile, says he's bullish on India and he believes India's economic fundamentals continue to look strong.
Currently, even in US dollar terms, the returns are not all, the index is not all-time high. So I would say it is just a good start. But you should look at the last X number of years annualized returns, let's say last 5 years, and they are in the same range as the last 10 years and then same range as the last 15 and 20 years, which is in the range of 13, 14, 15% per annum. This number we can celebrate, but we should not take our eye off the ball.
I wasn't always a bull on India, although I regret that. I should have been. And I am now, and I think it can go higher. And don't worry, it won't take long, but there's 4 reasons. 2 are domestic and 2 are overseas. And the one that I'd start with is that the government has laid foundations that are now being built on for a very strong economy. China was the market in Asia, which everybody wanted to be in. It isn't anymore. I don't think it will be for a very long time.
Well, will the rally have more steam from here? That's the big question, but new records being inked today. Now, the Reserve Bank of India has released the Financial Stability Report. RBI Governor Shaktikanta Das says sustained growth in bank credit and low NPAs are a reflection of a stable and resilient financial sector. The report shows that stressed assets in the banking system have dropped below 4% as of March this year. The RBI expects asset quality to improve further in the baseline scenario. Ritu standing by now to take us through some of the key takeaways from the Financial Stability Report. Ritu.
Well, Shireen, the governor starts the Financial Stability Report by making certain comments which essentially highlight that, irrespective of what is happening globally, the Indian banking and financial system remains resilient and their balance sheets remain strong. In fact, if you look at some of the numbers that RBI has highlighted, the capital adequacy of banks currently, as of March 2023, the latest figures, is at a historic high of 17. The Common Tier 1 ratio, that is again a measure of capital adequacy, is also at a historic high at 13.9% as of March, and their gross NPA are now at a 10-year low of about 3.9%, with net NPAs at 1% as of March. And really the result of the macro stress test that RBI put the banking numbers to shows that no matter how severe the stress situation gets, banks will have enough capital to be able to absorb any kind of shocks, even without any capital infusion from where they currently stand. So specifically, if you look at the NPA figures, which the RBI has sort of come out with, and again, this is not a projection, but just a scenario which RBI has considered of various levels of shocks to the financial system. So as of March 2023, for all banks, the gross NPA was at 3.9%. In the baseline scenario, this could actually improve to 3.6%. In medium stress, it could rise marginally to 4.1%. And in a severe stress scenario, it could go all the way up to 5.1%. Which is still, if you recall, marginally better than the numbers that we'd seen as of last year, as recent as that. If you segregate the banks into public, private and foreign banks, again, in the baseline scenario for public sector banks, there'll be an improvement. Similar is the case with private banks. For foreign banks, there will be a slight increase. In a severe stress scenario, public sector bad loans could rise to 6.1. For private banks, that could go up all the way to 3.8. And for foreign banks in India to 2.6%. In terms of capital adequacy as well, currently at 17% for the system. In the worst case scenario, it could fall to 3.3%. But again, here RBI makes note that none of the 46 scheduled commercial banks will breach the minimum capital requirement of 9%, even in a very bad scenario over the next 1 year horizon. There are 7 banks that may fall short of the minimum capital if you count the capital conservation buffer as well. But overall, the system remains quite resilient.
All right, Ritu, thanks very much for joining us. That is some of the big highlights there from the RBI Financial Stability Report. Now, the Infosys chairman, Nandan Nilekani, is addressing shareholders at the company's annual general meeting, talking about the global environment and its impact for the tech sector. Let's listen in.
AI in the enterprise is far from simple. And yet, the AI-first strategy we embrace is already working for us. We have redesigned the organization to judicially balance people, technology, and process, while also executing work by segmenting it into cognitive tasks. Today, we are able to bring to our global clientele the same ability to accelerate business value and amplify human potential using AI technology with Infosys Topaz. While technology is core to everything we do, at its core, Infosys is a people company. Nurturing talent for the future is key to our continued success. We spare no efforts to provide our employees with ample opportunities to learn and grow while assuring them of a safe workplace that is fair, rewarding, and free of discrimination and bias. The well-being and intrinsic motivation of our very talented, diverse, and multicultural workforce will propel us forward. We recruited over 50,000 college graduates in the year, bringing our total headcount to over 340,000 employees, of which 39% are women. Upskilling and reskilling them all for careers of the future is a top priority for us. Over the year, a training ecosystem enabled over 5.5 million learning days for our employees. Our people track and manage their own digital skills aided by a comprehensive score, the digital quotient. Through accelerated learning, when they complete certified courses and gain substantial experience in the skill or set or technology, they qualify for skill tags. As employees gather more skill tags, multiple career pathways into exciting technology spaces open for them within the Infosys ecosystem. Rich programs and intelligent platforms like Accelerated Marketplace automatically match employees to the roles of their aspirations. Matching a passion to deliver for clients and nurture our people is a commitment to the.
Well, that's Nandan Nilekani there on Infosys at the AGM, talking about the AI capabilities that the organization is developing and, of course, what the road ahead looks like. We'll head into a short break, but up next, Air India and Vistara. The merger flies into the competition regulators' crosshairs. The CCI issues a notice to Air India. That and more when we return. You're watching Business 360. The Competition Commission has issued a notice to Air India and Vistara asking why their proposed merger should not be investigated. The regulator intends to examine if the merged entity could hurt competition in the aviation sector. Danish Anand is standing by with the details. Danish, what exactly is CCI concerned about?
The Competition Commission of India has sent a show-cause notice to both Air India and Vistara seeking answers that why the approval process should be expedited and why shouldn't the entire merger process should be investigated in a more deeper manner. Well, the CCI has certain concerns regarding the Indian aviation market's future if the approval for this merger is given by the CCI. Well, CCI has certain concerns regarding certain routes and regarding the business class travel, as it is anticipated that the merged entity of Air India and Vistara could have a monopoly in the business class travel. Right now, the CCI merger process is in the first stage, and both Air India and Vistara have 30 days to submit a reply to the competition watchdog. It's been quite a few months since Air India had approached CCI seeking an approval of this merger. And if we talk about the May DGCA data, according to that, the combined market share of Air India group is over 30% right now. And if we specifically talk about Vistara and Air India, both these airlines had a market share of around 9% each, and it is anticipated that if the merger process is given a thumbs up from the CCI, then the combined market share of Air India, which will come up after merging Vistara, is expected to be over 20%. And if we talk about the entire Air India group, then it is expected that the Air India group could have a market share of over 30%.
All right, Danish, appreciate you joining us. Of course, the airline does have the option of responding and will respond to the CCI's concerns. With that, it is time for us to wrap up this edition of Business 360. Stay tuned to CNBC-TV18. The news continues. We'll see you right after this very short break.